Real Country 1430 AM and 1073 FM, WRDN. I'm Bryan. Winnikins. Joining us this morning is Bryan Doherty. He is with Total Farm Marketing. We are going to talk about the markets. And thank you to our newsmaker sponsors, including Wisconsin Farmers Union, A&J Agronomy, Synergy Co-op, Osteoplastics, and the Bisilo Animal Wellness Center in Buffalo Valley, and Compeer Financial. And Bryan, thanks for joining us when we recorded this Friday after market close. It was at the end of on the grain side, just a crazy week. These are numbers we haven't seen in quite some time.
Yeah, these are big numbers. These are numbers that we haven't seen since 2012 in drought year. And when we look at the weekly change, we saw 55-cent gain, 55.5-cent gain on the July corn contract. And I'm sorry, that was November soybean contract. My mistake. November soybean contract had 93.75-cent gain on the July or the November soybean contract. So a huge up week in the soybeans, but not to be undone or upstage when we look at December corn, just a massive scream higher. The weekly change on new crop corn just this past week was 72.75 cents. That's wild. That's more than we sometimes get in an entire season. So it's a reflection of a lot of things, Bryan. And it's a bull market, and it's sunk its teeth in pretty deep, and there's no sign it's over.
Okay, so it's a bull market, and there's a lot of outside factors, the lower carryout, drought in Brazil, issues with Brazil and South American soybean crops as well. And so Chinese demand, wheat has to go along for the ride because it's being used as feed, all of these things. But
U.S. drought monitor map, don't forget that.
There's that. But what is there? Do folks need to be concerned that, yeah, this is a bull market, but I'm hearing a clink, 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 clink on the roller coaster here, and soon the clinks are going to stop, and we're going to be at the top of the hill, and here we go. It's going to go down pretty fast and pretty heavy.
They do. When that day is, no one knows, whether it's Monday, whether it's 6 months from now. However, the trend is up now. What's different about this rally, let's say from 2012, when we hit our all-time high in corn, 849, is that was a midsummer drought market. We were looking at crop ratings decline. Right now, it's what, May 7th? As we record this, May 7th. We've never lost a crop on May 7th through the drought. So that can change in a hurry. So what producers really need to be cognizant of is just how fast things move up, how often they move down faster. So to your point, we need to be prepared for that. What's different, though, is this has been a cash-led rally. And so we kind of cycle this back through to what we've talked about for the last couple of years. Just to me, this massive, massive miss in 2019 on the crop production side of the coin, there was just no way there was 168 bushel yield on a corn crop. I flew over parts of the Midwest in the second week of June, and there was still water standing in the fields. So anyway, that's the lower yield that year, coupled with low test weight, coupled with last year's dry August, and big trade deals and big purchases, and the overestimation of the Chinese supply several years ago, if you might remember, the big adjustment, huge. So anyway, I'm kind of lamenting on here and moving, a lot of variables around. But what's different is just that we've never been in something like this that I can recall in my almost 32 years of doing this, and then also growing up on a farm and seeing some of the early 70s type things. So it's what I'm getting to, Bryan, is I'm driving toward a balancing act. It's really, really important that producers think about using all of their marketing tools at their disposal, ask critical questions, but think about how to make responsible sales, how to own responsibly, how to not sell, but put a price floor in. This is critical. This will separate the marketers from the lucky or from the really disadvantaged.
I know, even the stock market's been going and crazy. with all the stimulus money that's kind of going into the market. There's a lot of speculation, and some in the stock market they say there's too much, quote, froth. Do you think you see that in commodities?
When we run this fast, this hard, it's often a combination of several things. One is the speculative interest, those who bought, those who invested, that managed money that's buying commodities for whatever reason, whether they feel it's inflation, it's just good value. Um, they look at the fundamentals, the charts are telling them to buy. If they've been in the market for any time, they've made a lot of money, or they make money. So human nature, Bryan Doherty believes human nature comes into play. You just keep doing what you're doing as long as if you're successful with it. So money sort of begets money. So it's easy when you have money to work with to use that money to buy additional inventory and buy additional contracts. So you get that as part of the acceleration phase. That's in a quiet market, you don't have that. So this is sort of that froth when the speculative interest really starts to build and build in a big way. And then finally, the smaller speculators start to come into play. I heard a story today. This will resonate. That one of my farmers said, when I start having my neighbors who aren't farmers start asking me about how to buy corn, that's about time to start selling corn. um, so there's that element. There's supply shortages. There's tight inventory. All of these things, but at some point the end user just can't afford it. So I don't know if we've hit that critical mass yet.
Talking with Bryan Doherty with Total Farm Marketing, you mentioned that end user, and if we switch to the livestock markets, yes, on Friday there was a little bit of a pullback in hogs, but there's been a lot of talk that so far the end user, i.e., the consumer, is pretty much not really caring about the increase in prices for hams and bacon and all of that, and so the beat goes on.
That only lasts for so long, I think. Let me kind of give you a picture of maybe an average consumer. Maybe they've been working from home for 6 months or a year and a half. They've saved the gas money. They haven't gone on a vacation. They've got disposable income. As long as they've kept their job, they've got disposable income they don't normally have. And so there's sort of this pent up demand for a lot of things. And people have a tendency to sort of spend some of that. Now, they might spend it all, but they're going to spend it. Man, groceries are up. Well, yeah, we expected that. But at some point, that all begins to sort of come home too. I can't, maybe it's just me, maybe I'm old school, but I can't hardly believe that the idea of people going back to work is that incredibly bullish to an economy. Were we that strong before? Um, you know, we've picked up what 3,000-4,000 on the stock market, and just after hitting all-time highs. That's pretty incredible. There's probably going to be somebody out there who's going to start scratching their head wondering how we're going to pay the piper. That is, we're going to get tax increases. It almost has to be, but it's not happened yet. So people aren't feeling that, but that'll all come home to roost. The inflationary concerns. Probably the thing that's driving the stock market, I guess, from my just armchair view, is that it's working. Again, people are making money. They continue to invest. We get these bubbles. There really isn't a lot of elsewhere to throw your money. CDs don't pay. Mutual funds don't pay. Bonds don't pay. Or if they do, they're so minute that you kind of feel foolish for trying to earn 2% over the next year when you can earn 2% in a week.
Exactly. Talking with Bryan Doherty with Total Farm Marketing, I would almost say out of any of the at least commodities that we follow, with the corn, soybeans, wheat, and the livestock, it's the dairy markets. They seem to just be like, yeah, they have their up days, but then they have their down days. It's just like, nah, it's just another week in the milk markets.
Kind of feels like it, doesn't it? But they've got a firm tone, and you got to give credit that they bounce back really sharply, considering increased production. You throw a 2% increase, just about every month, and you've got extra inventory, and is the consumer back, or is the consumer, all this whole COVID thing, trying to figure out, well, are people at home eating more pizzas and therefore consuming more cheese? All these things. But I think where the dairy industry, if a dairy producer is in good shape, is he probably grew his own inventory last year, or hopefully he hedged or bought his inventory when it was pretty cheap last fall. Then the market started going up. So it never really gave anybody sort of this invitation that we had this massive rally coming. But I think most producers would probably argue they're feeding, whether their argument might be, whether corn is $6 a bushel or whether it's 350. I grew it, so I'm feeding the same bushels through. Next year's a different story, though. So I think you're going to start to see some changes in the dairy industry.
And that's my next question is, at what point do dairy farmers, even this year with what's going on right now, Bryan's dairy farm, I have 500 head, let's just say, but I have all this corn out there, and I'm looking at 300 acres of corn, and it's like, geez, I hear the guy on the radio talking about 750 corn at the local elevator, and the bases are positive and instead of negative, and geez, and my milk markets really aren't going up. Maybe I should get rid of some of these cows and start selling corn. Where does that happen? At what point?
Well, I think there's certainly attentive producers who are absolutely looking at that, and I think they're starting to really take notice. We're hearing producers talk about this. So I always argue it's kind of the length at which this lasts. Let's go back to 2008, Bryan, and just use that as an example. So that year, corn rallied, just rallied up to $8 a bushel. And within months, literally months, was under $3 a bushel. So in a year like that, yeah, you had all the consternation, concerns, and do I make production changes and those kind of things. And so I think people kind of learned that year, at least, you don't jump quick. In this environment, though, the thing that is I'm going to keep circling back to is this whole grain rally is part of all this whole inflation, commodities. You can put it into all those camps. The reality of it is that it's been demand driven, it's supply driven. I argue that I don't think the crops were as big as the USDA was using in their forecasting models. The quality wasn't there. We ran the supplies kind of tight. All of a sudden, we've got this growing demand, and you get a weather market in South America. And oh my goodness, so where does the dairy producer end up? I do think that when they look ahead, and right now, if I'm a dairy producer, I'm looking ahead to next July. 635 on the board. I'm starting to really think about how I want to manage this. Try and find some corn for next year. So I'm thinking that you're going to start really seeing producers thinking about just what you said. If they have some choices, I'll sell some corn. I'm going to get rid of some cows. And that in and of itself starts to happen at these type of price levels.
Talking with Bryan Doherty from Total Farm Marketing. So really, Bryan, for producers, I know they all love hearing yours truly mentioning up and away on the prices, it seems like every day, but the higher these go, the higher the danger here. And so producers really got to start kind of treading carefully, don't they?
Well, producers on both sides. Yeah. Grain producers have to tread carefully. They've got some real opportunities at their fingertips, and a lot of them, it's just the way it is. So people shouldn't beat themselves up, but they get, $10 for beans out of the field. Well, they're not getting $14 and $15 for their beans right now. They've got a good price for next year staring them in the face. So the goal is not to miss that. So tread softly, as in reward the market, sell ahead, sell early, sell often. I would say look at the option markets, look at option strategies to reduce costs. Options are very pricey right now because of increased volatility and because of higher prices. Remember, if you're going to buy a put from somebody to put a floor in the market, somebody else out there is taking unlimited risk. So they need to be rewarded for that. So don't try and compare a a high strike price put in today's environment to where they were last fall. It's not a good comparison. It's just the reality of where it's at. But it's a real, the goal I guess I have here in this conversation is to just really encourage farmers to don't bury your head in the sand. Don't walk away. That guy on the radio is confusing me. He's talking about strategy. I don't know what to put is. Invest some time and energy and effort into understanding some of these tools and then talking to the right people, because being unemotional, being disciplined, being strategic, and using the right tool at the right time, those are big, big things. And that's where we see farmers who are all good farmers, but separate great marketers from average marketers.
So farmers, right now, it's time to make that plan. And you know what? Talk with your spouse. Maybe have your spouse help with that plan as well. And the easiest way to really do that is give Bryan a call. Bryan, folks can call you and find out what to put in a call and options and how they all work and how can I set up a plan. They can just give you a call at Total Farm Marketing.
Yeah, they sure can. I'll give you that number. And great advice. What you talked about is communicating. Communicate with your spouse. Communicate with your family members. If you're taking all this on your own shoulders and trying to make decisions, that's tough. So one thing, good communication. That's one of the cornerstones that Bryan Doherty calls cornerstones of good marketing. Strong communicators. Communicate your goals, your ideas. Um, if you want to call us, don't call and ask, hey, where's the market going? We don't know. In this environment, it could go a lot higher, it could go lower. So we always try and plan for what if it goes up a little, what if it goes up a lot, what if it goes down a little, what if it goes down a lot. And so we start with that sort of as the premise, and then think about what cash sales mean, what it means to forward sell, those type of things. But just, we'd love to have a quick conversation. 800-334-9779 is the best way to reach us. And I'll repeat that, 800-334-9779.
Give Bryan and staff a call. John Heimberg as well. Give him a call as well.
Great source.
At Total Farm Marketing. Farmers, it's a great idea. Have that conversation with a family member, someone who preferably, at least in my opinion, someone who preferably hasn't done any planting. They're not emotionally attached to the milk, to the cows, to the corn, or to the beans. They'll follow the plan because that's the hard part. Everybody gets emotional in this, don't they, Bryan?
They do, Bryan. And I wanted to say this. This is my experience that when the markets move like this, to me, when I see farmers, this is all, especially producers, this is wonderful. It is also the most stressful because no matter what happens tomorrow, you can really beat yourself up. You didn't sell enough or you shouldn't have sold anything. And it's just like that every day in this environment. And so we spend a lot of time right now talking to people. I mean, they have an open forum to sort of vent to me. So when they say, I wish I wouldn't have sold those, that $6 corn, it's now $7. Well, really? I get it. True, but you didn't sell all of your corn either. So you're always kind of just reminding people where that balancing act is. But it's challenging. It's emotional. Doing nothing is an extreme that can pay huge dividends in a year like this. It also, puts people out of business. So it's still a plan. It's still a strategy. So just kind of keep that in mind.
Bryan Doherty, some great advice with Total Farm Marketing. You're listening to the WRDN Morning Farm Report.